Adriana Saman is a managing director at Clocktower Technology Ventures, where she leads the firm's Latin America venture investment strategy. Originally from Ecuador, Adriana's journey has taken her from studying political science at the University of Pennsylvania to holding roles in both investment banking and digital payment strategy at JP Morgan before ultimately transitioning into venture capital. At CTV, Adriana has backed startups across payments, embedded finance, and energy infrastructure. The firm's portfolio includes companies such as Zimple, Nico Energy, and Toku. In our conversation, Adriana shares how she first became interested in venture, the importance of transparency and founder empathy, Clocktower's approach to portfolio construction, and why she believes LATAM is becoming a catalyst for global fintech innovation. Hi, Adriana. How are you?
Hi, nice to see you, Mac. Thanks for having me today.
No, I appreciate you making the time. I've been a fan and following from afar for Clock Tower Ventures and excited to dive into what you guys are doing and a little bit about your thesis and, of course, your path into venture. So, without further ado, I'm always curious of your background and how you got into venture. And I think you are from Latin America. So, could you dive into why you chose to come to school here? And then we'll go from there.
Yes, I love that question. So I am originally from Ecuador, born and raised there. And I guess in Ecuador, if you have the possibilities, you're frequently thinking about studying abroad somewhere else. Not necessarily to never come back, but to gain different perspectives, other cultural experiences, and even study in another language. I always thought I would study in Europe, actually. And then I had a very good friend in my debate team that I really admire. She was older, and she mentioned she got into this university called UPenn, which I had never heard about. And that sort of put me through this rabbit hole of trying to understand why she would go there and like what this place is and even what the US university system looks like. I hadn't even considered it. This was like my junior year in high school. And long story short, did a little US tour, saw Penn, fell in love with the university. Fully bought the Benjamin Franklin story of you don't have to be good at one thing. You can learn many things at the same time. You can take classes in all the schools. And I was like, this is where I'm meant to be. And I only applied there. I was like, I am meant to be here. I applied there early as session, and I decided that if I didn't get in, I would go to Europe, but I wouldn't want to go anywhere else in the United States.
Nice. No, and maybe there's some parallels as we get into later of just being all in. And it seems like, as a venture investor, you have to be all in. So
It's
we'll get
true.
to that. But before we dive into your university days and in your career after, I'm curious about your early childhood. Were you always passionate about things? Did you have certain hobbies that you were very all in on as well?
So in terms of hobbies, I used to be a big swimmer, and I used to paint a lot when I was a kid. In terms of interest, though, it is true that even though I could never pinpoint what I would do about it, I was always very aware and conscious of the challenges around financial inclusion in Ecuador. Like that was always a thing in my mind. It was just shocking to me that most people didn't have a bank account. Like those sorts of things. I was like, I don't understand. And my mom was always telling me how we should teach people how to save and how to understand how to um, use their money and just that always stuck to me as something that mattered. And it sort of informed a desire to study international development, which is I ended up doing political science at Penn. I always thought I would be in like a big nonprofit, and then I understood that that really wasn't the way to the kind of impact that I wanted. But yeah, that was a bit of an impetus that ended up getting full circle in what I ended up doing later.
It's ironic, but I've actually come across quite a few Penn alum that actually are investing in LATAM.
Yes,
Actually, tomorrow, Carlos Torres's episode comes out. A great friend of mine, Eric Schwartz, also went to Penn. I'm sure you're familiar with them, or I'm sure you know them.
of
But I think
course.
it's just very interesting. Like, I don't know what it is, but it's like venture investing or angel investing in Penn. So I don't know if you have anything to add to that.
I think it's so true. And by the way, Eric and Carlos were a year above me at Penn. We were good friends in college, and we're very, very close collaborators today. And I could go on with like a list of 10 people. There's something about it. I think what's interesting about Penn is everyone was told to do investment banking, which is what I did. Both Carlos and Eric did that as well. I'm pretty sure. And then all like a very big amount of us ended up being founders or investors in venture. I don't know if it's the same network effect of us staying in touch or what New York does to you. I don't know how to pinpoint it, but it is probably the most powerful network that I have been a part of.
Yeah, and it's so interesting because Carlos and Eric says this, and obviously you're very global, but you just have like a very big global awareness. And I think when you think of like making an impact and in venture, what better place to make an impact than investing in technology that hopefully changes the lives of hundreds of thousands or millions of people?
Yeah, it's true.
Okay, so take me through now. You mentioned you were investment banking at JP Morgan, and then there's this in some ways it does make sense, but then this big pivot from going from digital strategy and investment banking to venture. And then how'd you end up on the West Coast? Because that is not the easiest transition either. So how did that opportunity arise and what made you think that this is the right decision?
So the banking decision was very straightforward. I wanted to stay in New York. I needed a work visa, and it was the most straightforward path to get there at Penn. Didn't think too hard about that one. I did want to be part of the Latin America group because I always had this interest in learning more about the region from a business perspective, and I found that to be the perfect balance of not fully giving away my soul by at least doing the subject matter that I cared about. It was like that gave me comfort. Afterwards, I one time I literally heard the word fintech for the first time. And I was like, wait, fintech? It's like technology for financial services. And then just like a light bulb went off in my head. I was like, this is what I've been always thinking about. In a very abstract way. How can you help people be better about their financial lives? How can you empower them? And then I immediately was like, oh my God, everyone in LATAM has a smartphone. This was like in 2017 when people were not talking about this. And I was like, this is what I'm meant to do with my life. And I thought that would imply being an operator. And that was my initial impetus out of banking. I went to all of these happy hours in New York, literally knocked doors of fintech companies. I was like, I just want to work here. I'll do whatever you want me to do. I want to be a part of this story. And no one wanted to hire me.
But do you think that was not maybe necessarily because of the talent, but the visa challenges? Because I'm familiar
It
with
was,
that with
I
my
mean,
wife.
definitely
It's tough, the visa.
maybe the visa, but
Yeah.
also I don't think it was the talent per se. It was just like now that I'm an investor, I understand in a startup you need people who are very experienced in domains that are specific, and like a 2 year sort of investment banker that's like very bright and excited doesn't always fit in a startup. And I don't take offense by that at all. I just thought it was interesting that I was like, I can't figure this out. Like what else can I do here? And then I ended up staying at JP Morgan because I met this digital payments team where they were pitching me, we're building a startup within the bank, which it never pans out quite the way you think it's going to pan out. But I was fortunate enough to join an incredible team of people that they had really invested a lot of money in getting everyone together to rethink the Chase app and all the payment products within the Chase app. So even though I didn't get to be an actual operator, I got firsthand exposure to the biggest fintech app in the United States. And I understood how these products are built. I understood why it takes banks so long to push things. And it's not because they're incapable. It's like there's regulatory and all sorts of considerations that I had never considered. And it really opened my eyes to, okay, this is how banks do it. But then what are all of these challenges that we're constantly tracking and talking about in our innovation team that we want to make sure that we're going after, that we're replicating their features, that we're uh, keeping our clients. And then it's like, wait, who's funding these companies? Like, how do they exist? And that's how I sort of came across the concept of venture for the first time. I was never looking for venture. I was really looking for fintech.
But as you know very well now, when it comes to venture, fintech is so prominent. So I think it actually worked out very well for you. I just thought of this and tell me if you have a perspective is being at JP Morgan and with this Chase initiative to maybe launch more products. Has that helped you nowadays? And do you carry some things that you still remember when you're looking at potential investment opportunities where you're like,
For
hey,
sure.
yeah.
Definitely. It's been so helpful. I didn't see it at the time. And now I'm like, yes, it was very, very great. Because it gave me a grasp of what the process to build a product is. Because we had product managers and engineers and squads, and like we were trying to work like a tech company within the bank. So even understanding those orgs, how people think about that was very helpful. And then diving deeper into the deposit, a check product, the billing, the transfers, the security of dealing with aggregators like that, and all the challenges that we were thinking about. How do we protect our customers? How do we make this better for them? Gave me so much perspective when talking to founders that are building in these very specific subdomains. On the other hand, it allows me to build conviction in things that I really don't think Chase will get there. Or people are like, oh, they're gonna eat them, or that they may get there. Exactly. So it gave me this sort of incumbent point of view that I think it's incredibly important when you're building in a place like financial services, that a big chance of your success will be linked to an M&A or to selling into these banks and understanding how they operate, what they care about. I think it's fundamental.
Yes, that is very clear. So I take it that the Clocktower Ventures opportunity doesn't just come and knock on your door. Like many people, it's not always the easiest to break into venture, and of course, it's very competitive and small. Can you share a little bit of how this unfolded and why you thought, okay, I'm gonna pack my stuff up and move across the country to Los Angeles?
So it did unfold in a very, how do I say, serendipitous way, where right around when I was figuring out that I wanted to do this thing called venture capital, a recruiter reached out and she was like, there's this fintech venture capital fund in Santa Monica. I was like, okay, fintech venture capital, where is Santa
Yeah,
Monica?
where's that?
Never been to California, never. Yeah, it sounded beautiful. Had never left the East Coast. And I was like, I don't think I'll ever move to wherever Santa Monica is. But this opportunity is too perfect for me to not engage. And then that was very naive of me because the moment I met my team, I fell in love with them, and I was like, I need to do this. It doesn't matter. This is perfect for my skill sets of like sort of understanding how investment works and then having a more intuitive understanding of financial service products. But then also just being a part of a small team that was very, very early on. We had a janky website. That's all we had at that point, but
Gotcha.
very eager to build a lot. And I just, it was an all-in moment, like you were saying
Yeah,
earlier. Like
you're
I
all
just
in.
had it in my gut. I had my gut feelings. You know what? This is it. I'm gonna move to LA. Didn't know anyone in LA. I didn't care. It just felt like a awesome adventure. And they did sponsor my visa.
Nice. That is always important.
Very important.
I'm so aware of that. My wife's from Monterrey, Mexico, and we've been through that many, many times. Hence why I'm here in Mexico City.
Makes sense.
But so before we got into Clock Tower Ventures, there is a group here. I'd love to have you hit on a few points. Clock Tower Investment Group was founded quite a while ago in 2007 in my research, and it has many different arms. There's strategy, there's Clock Tower Asia, then there's Clock Tower Ventures. How do these verticals coexist, and what is the umbrella of Clock Tower Group?
Clocktower Group, we're all based here in Santa Monica. We're a boutique asset manager, and the genesis was around, well, our founder, Steve Drobny, has a long history in the world of macro hedge funds. And so our core and first product was a macro seeding platform that we still have today. It's basically, we find new hedge fund or managers that want to spin out of hedge funds, launch your own hedge fund, and we fund them their GP, and we give our LPs an ability to fund them perpetually. So that product and a lot of events and community building we have built around it yielded what I think is the most interesting community of macro thinkers in the world. Being surrounded by these people unleashed these other ideas of products that we have launched ever since. The venture product was launched 10 years ago, and that was also a macro call in a way. We were like, there's an opportunity here in financial services being underinvested relative to the market cap of financials and relative to the amount of venture dollars that have gone to other verticals of the economy. We think it's going to change. We want to do this first. So that was it.
Sorry for jumping in. I just wanted to make sure we hit on this point. This is very different than a lot of these maybe smaller fund 1 through 3 venture funds. You guys have this long legacy. And do you think that provides a lot of insight when you guys are adjusting or looking at your thesis and reevaluating what you're looking at?
It does. I'd say it does and it doesn't. It does in the sense that I do find that we literally think more about the world first and then the venture decision second, in terms of even the decision to launch a fund in Latin America was a macro goal. That was like a whole top-down analysis to decide that this was an exciting opportunity. We can dive into that later. So that is true. And then we also get exposure to people that are not in tech, that think about the world differently. And that informs our view in a different way. However, venture is still venture. And there's still a very micro component to that, which is you have to go to the events, you have to talk the talk, you have to meet the founders, you have to meet the investors. And in that part, I think we're 100% like the average venture fund in terms of how we operate. We try to be very ecosystem driven, and we try to bring our founders to the broader Clocktower ecosystem, the ones who want it, and they love it. And they get access to our research from our strategy, and like no other venture fund is going to give them, the thoughts and the time that there is from like and 5 trade ideas associated to that. Those are different things. But I see that as as you said, an ancillary value add, not as the core of
Yeah.
how we do.
That's a good segue into Clocktower Ventures venture fund. This was launched about 10 years ago. And was the thesis basically on LATAM only at the time, or has it broadened?
No, the thesis was US only. So when we launched the fund 10 years ago, 2015, it was a friends and family vehicle. And as I was saying, it was a literal macro call of, you know what, there's an opportunity in venture here. Let's do it. I think it was around the SoFi IPO on deck, like these first signs of something big happening in financial services. And we also decided to design it from scratch in a different way. We're like, you know what, we're going to not lead, we're going to always co-invest. And we're going to bring the value of our macro universe to these founders because a lot of the initial fintech founders in the US actually came from the macro or like the hedge fund world. And so that was the genesis. Did the first fund, then the second fund we institutionalized it, raised $73 million. I joined, I am basically a vintage of fund two. I joined 2018, which is when we launched the fund. And in 2020, I started spending a lot more time in LATAM. It always came naturally to me because of my friends
Of
and
course.
in my natural interest. Like I would see companies, but then I started seeing that there were a lot of good companies. We were
Yeah.
like, wait, this is like, I'm not just gonna keep passing these deals to other people. We want to spend time with these deals. We want to meet these founders. These founders are amazing. And we did a lot of the macro work around why this opportunity would actually be exciting. And after a couple of deals that we put in our core fund, we were like,
Great.
no, this is more. We want to have a dedicated fund for this. We want to do
Fine.
this right.
Okay.
And so in 21, we did the same thing that we did with our US fund. We called friends of the firm. Like we only have one institutional investor in fund one. We were like, this is what we're seeing. Will you back us? And so we raised that first strategy that was $31 million, and that's what we have been investing out of so far.
Gotcha. So just to make sure I'm clear, you guys took the same approach of follow on only, not leading rounds with this fund for focus on LATAM?
Yes.
Wow. Very interesting. So when you think of portfolio construction, are you guys coming in at inception, seed? Typically, where do you guys come in with check size? How has this evolved? I know there was this massive boom in 2021. I'd love to hear everything.
Of course, great. So we think a little differently about portfolio construction. It's almost like two funds in one. We have what we call our seed book and we have our A book. And what I think is most important about this is that most of the capital, roughly 70% of it, will be concentrated in maybe like 15 to 18 Series A bets and will carry most of the weight of the fund. And then we have this seed book that's like 30 companies that we find gives us, on one end, opportunities to find companies to build on our Series A positions, but also enough volatility to yield a single fund return. If you X net that fund, you can actually, and then you get more upside skew from the bigger positions. So it's a bit hedge fundy how we've structured it, but what I like about it is that it allows us to be very disciplined and very focused on the decisions and not get decision paralysis around the check size. We always have the same check sizes. So we're not ownership driven, but we are price sensitive. We're thinking about each opportunity individually as, okay, is this an attractive risk reward opportunity in the seed and the A? Do we want to invest in this thing? And it's a different process for each. We can dive into that later. And then if the decision is yes, then we write the same check size. And that allows us to build a bit of a programmatic, more orderly portfolio. It also enables people to know exactly where we land, how we do things. Very easy to be collaborative when people know exactly what to expect from you. And that also allowed us to build the single largest fintech book in Latin America. We have
Yeah.
45 companies.
Have you had many times where two scenarios happen? You don't get enough conviction to invest at seed, but then that company could be an opportunity at a Series A. Or how do you also, evaluate the opportunities you place a bet at seed? And then is it clear who you want to follow on with that A if from that initial batch? Has that been tough?
In LATAM, it hasn't been that tough. So very different decision making for the seed because it's much higher velocity. We're founder. It's our North Star metric. That's all we care about. And the times that I've regretted not doing this are the ones like if we ever get too carried away by the narrative and we're like, this story sounds amazing. The founder is like okay, or the opposite. The founder is amazing. I just don't believe in the story. The founder, they're pivots. Company in the end is a combination of people making good decisions. So what you want to get to is the highest number of decision makers that you can that are like more likely to yield good decisions, right? And so if you think of it from that perspective, seed really will be all about who is making the decision. You can have an amazing story, but if you're not making the right decisions, you're not going to get to the outcome. And that's something we constantly go back to. Like, just remember that's our north star. For seed, it's all about the founder quality, and we can unpack what that means in fintech, right? Because founder quality can encompass a lot of things that are very important, but that's how we think about it. In Series A, we are much more methodical around the traction, the work, the product market fit, the competitive landscape. We do proper diligence, and we usually collaborate with the leading investors. So we don't take as much time from the founder, given that we're not going to be leading, but we try to get to the best approximation of work that we can within the time frame that we have.
Yeah. And with this interesting portfolio construction, you guys also invest across so many different categories: lending, payments, infrastructure, DeFi, embedded finance. You cover so much, you see so much. You can start seeing trends in different founders, maybe that spawn off from other companies. But how is there complexities to this? Is this hard in some ways? Because you do, okay, are they going to come in the seed fund? Are they come in Series A? And we basically can invest in anything, right?
Correct. I think the Cine Series A part is straightforward in terms of if we like the founder at seed, not gonna wait for the day. So that actually that removes complexity. The rest, yes and no. So yes, very different to invest in an insurance company than a payments company than a lending company. And the way we have designed that internally is we have a system of majors and minors that is not formal, but it's very clear. Like partner Ned used to work in equity research for banks and like used to dominate for banks. And like he's our person for everything that's capital intensive, like banking and insurance. That's his own way. I tend to spend a lot more time in payments companies, in consumer facing products. That's sort of my major. And Ben, more capital markets things because of his personal background at Bridgewater and trying to build an ETF company. And so we complement each other in that way. We also think, yes, there's several verticals, but it's still all within the umbrella of financial services. Doing this for, I've been doing it for 6 years, then for 10 years. The amount of reps that you get uh, enables a pattern recognition system that makes it much easier to at least to kill things fast and to identify where you want to spend time. So even even if I'm not an expert in insurance, I have a mental framework of what matters to me in an insurance company, and that's gonna make it easier for me to cut through a lot of it and focus. I think that's the importance of being specialized.
So for you guys, I want to hit on this not leading rounds because it's so difficult to find DPI in LATAM and emerging markets, but you guys have had success and you haven't had to lead rounds. But there's also a lot of benefits, as you know, like there's this ability to be transparent or more transparent with founders, I should say. How have these relationships grown with founders that you know, like, hey, I'm not going to take a board seat. Like we are along for the ride and we're betting on you and we have this more open, transparent relationship. Is that the right way to cut this?
Yes, I fully agree with you. It is. And that's a part of what we tell founders when we commit. We're like, I mean, we're not your literal friend, but someone who's not sitting on your board. And the way I like to qualify our interactions with founders are they are lower frequency but high quality because founders choose when to talk to us. And it's usually because they want advice on how to deal with their board, which is the kind of information that you really want. It's usually advice on fundraising around I might get preempted, help me get more introductions, help me get more access to other people, give me feedback on how to deal with this dynamic. Or it's usually a financial service question. You know what? You are my fintech experts here. I need to go raise a credit line. How do I go about it? Help me prepare the deck, make introductions to lenders, and similar stories with like other categories. And so there's never pressure because we're never gonna be judging them. And I really love that. I feel like in Latin America that even goes a step farther. I feel founders really do become more of your friends. There's the WhatsApp thing that makes it very different. And I think you can ask many of them. I think they feel very comfortable reaching out to us, particularly me. I'm on WhatsApp all day and helping with all sorts of things. I don't see a compromise in the quality of the relationship. I think you just have to engineer a way to still bring value to them. And we also put a lot of emphasis on ecosystem building. So we throw amazing events. We actually have our big event in Santa Barbara coming up in September for our founders. And we try to create ways that only add value to them that don't require them to do much more than like showing up. And we're like, trust us, we're curating this for you the best way possible. And we do it when we go to the cities with dinners. We send the intros to strategic people. So it's just a different way. But because we own that sort of financial service expertise, work on the network, and like know that we're gonna be here, but we're not gonna bother you. It's great. It's like people know exactly what to expect, and that's what we deliver. It's very straightforward.
Yeah,
No
and
no
they
room for disappointment.
yeah, and I think also in some ways it makes it super clear they know that you're not gonna lead the round, So you're either in or you're out. Like you don't need to preempt it. And that makes a very
Exactly.
straightforward relationship, or more straightforward, I should say.
Sure, and by the way, there's also a component of we don't have to put money in the pro rata if we don't want to. That's not gonna ruin the signal for the company. Gets in the weeds of like some more sensitive venture dynamics
Of
that I
course.
think we are lucky enough to not need to deal with necessarily, but always help to the extent that we can.
Focusing on the LATAM region, you guys have invested across several countries. What do you think some of the nuances, let's just focus on Mexico and Brazil, are when you look at an opportunity? And then the second part to this is, where do you think people, maybe other venture investors in the US or someone new to the ecosystem, gets wrong about LATAM?
Yeah, for sure. So, in terms of Brazil versus Mexico, I think when you look at it from the financial services lens, the contrast is like particularly stark, right? In Brazil, you have the single most advanced central bank sponsored payment systems in the world. There's nothing like Pix in the world, nothing like the adoption of Pix. And the way that payments are evolving there and the speed of progression of fintechs in Brazil is unparalleled to no other country. And for us, that's incredibly exciting. I think so it's important to understand the nuances of that and how Brazilians are the number one adopters of social media, even ahead of Mexicans. Like there's ways that they operate that's like very different. At the same time, they also have a much more developed local capital market system. And I think it's also really important when it comes to venture because if you're a fintech, you have lots of access to credit, lines to finance if you're a lender, and then you can actually self fund from like pre-seed through growth or IPO. Technically you could do it locally. It's very hard and not what people necessarily aim for, but there's enough supply of capital every node that you can do it. Mexico, I think it's a different story that has different opportunities. I also think it's a great market. We have almost a similar number of companies between Mexico and Brazil. So that should tell you that we really believe in the market as well. Mexico, I think the evolution of the regulatory framework for fintech has gone very differently. I think what's important there is the regulators are strong and respected. And as an investor, um, at least you can predict that you're going to operate within a framework that will be there. It's not like other countries in the world where rule of law is not that strong and like you do whatever. No, no one messes with the regulators here. Like we've seen companies get shut down, we've seen companies pay fines, and even though that's not fun, quote unquote, I think there's a genuine emphasis in protecting consumers and making sure that things that are developed are actually within the framework. Whether that framework has been good or bad, that's a different question. Whether they've made mistakes in producing those frameworks, it's a different question. But there has been an interest in pushing that forward, and I respect that, even though there's room to make it better. Another thing that I find interesting about Mexico is how much more cosmopolitan the city is. So you have a much bigger blend of international founders that are building in the country. And so very different perspectives are coming from the US, from Europe, just to come after the market opportunity, which is so big, right? Brazil is much more closed off to like Brazilians, or Brazilians very hard to break into.
And also I think to add to that point, I think a lot of people misunderstand it's actually very far away from Mexico, but even more so the US, like so far away. As a naive American
Totally.
amateur, I'm like, oh my God, this is not 5 hours. This is like 8 to 10 from
Yeah,
Mexico
it's
City.
it's 12 from
Yeah,
LA.
yeah. So I think that does impact a lot
Yes,
when it
very
comes.
different. Even the influence of Asia. That's also, I think, something that's very nuanced and very interesting. Brazil looks a lot more like Indonesia than it looks like to Mexico from a demographic perspective. And even their social media habits look more like Asian habits than Mexico. Mexico feels more like the US. And Mexico is the US number one trading partner. And I think there's a natural hedge there that is also very interesting when you think about the kind of macro exposure you want to have to these countries. That's very unique.
Switching now, just so we stay on task here with your guys' portfolio. Last year, I saw that you guys invested in Simple, Grupo Pago, and Nico Energy out of Mexico. And obviously, you guys have many more investments, but just focus on Mexico. I'd love to hear you speak on a few of those. And then, of course, we'll get to some recent news with Toku.
Great. So yeah, in terms of Simple and Grupago, again, always founder qualities or North Star. In both cases, coincidentally, both Daniel and Uri have been good decades-long friends of Ben, my partner, which, it's usually my friends that we're backing. It's usually Adriana's friends. In these two cases, it was Ben's friends that I love dearly. And I think it's interesting that we met in both in that year, and that was just a coincidence. 2024 was a very slow year. We both do have these commonalities around going after the more underserved segment in Mexico, where I think still that the credit opportunity is very large. To highlight something for Simple, this sort of socially engineered network of using sales reps that, to lend to the people that they know are going to pay because they just know who's good and who's bad. That's very hard to capture with a machine. So there's something very Mexican and nuanced about that distribution strategy that I think is brilliant. In Grupado, I think what's exciting about this company is, we've tried microlending, microfinance in very different shapes and forms. But I think now with AI and the amount of tools that we have at our disposal, you can actually enter an area where you really can finally truly disrupt underwriting in the way you haven't done it in the past. So it's very exciting to see not just the process of the decisioning, but even the process of the underwriting and the disbursement, how it's all automated and how that allows them to iterate on product much faster than ever before. So these are two, I would say, less down the fairway models, but stories that I think are telling of what's happening in LATAM, which is like you're coming with your own homegrown stories. You're figuring out what works for your local economy, and you're not just replicating what happened in the US.
That's a great point. If you were to say this to traditional VC out of the coast, New York or San Francisco that doesn't know much about LATAM or Mexico, and you said, okay, this is Simple's business model, they'd look at you like, what? What are you talking about? How does this work? But I remember I did an interview with Daniel last fall, and he said when they launched, his phone wouldn't stop ringing because all these providers, or I forgot what the word he used, kept calling him saying, "Is this real? Is this real?" And like it was crazy. They had all these people that need and access to a small credit line because they couldn't afford their inventory. And those are the type of things where you realize, okay, there is some product market fit here from an early standpoint.
And then I don't want to forget Nico because I know you mentioned Nico too. So Nico, and this is, as I didn't mention this best, but we recently launched a climate strategy a couple of years ago. Similar vein of Clocktower to do it, find a macro trend and be an expert. So not a macro trend in climate, we launched a dedicated fund. And Nico was actually a deal from our climate fund because the thesis there really is Mexico is ripe for a decentralized solar power system. And these two guys, Rafa and Edu, with their prior experience in cloud kitchens, which is executing capital intensive, operations intensive things in emerging markets, where like who's better equipped than them? The irony and the funny part is that it ended up being led by QED because the financing component is key for this thing to succeed. And it doesn't matter which one it is, they're part of the Clock Tower family. It's just interesting that we came at it from a different point of view and it went full circle to being also a fintech company.
I know I wanted to bring this up because you guys are an investor, but Toku just raised this massive, I would say $48 million Series A, and you probably knew about it way before the public. I'd love to hear your thoughts on the vision, the founders, and obviously you're optimistic about their growth potential.
Yes. I guess Toku is the quintessential story of how our little seed book evolves into a book works and founder quality being the North Star again. We met them at the YC demo day when they weren't actively looking to raise like a seed. They had like a safe open to raise $2 million. And we met them and we were like, this makes so much sense. It's again, if you adapt it to Latin American reality, for people in the US, we're like, why is this that interesting? It's like, well, you don't understand. Like cards always fail. And I've seen it with my parents. They get this like late fees because the card didn't go through and they never found out.
Mm-hmm.
So it's very raw level. Like if you're helping recurring billers recover money that would have been lost um, because the payment didn't go through involuntarily, reducing involuntary churn can be such a big enterprise level problem to solve. And we thought it was the perfect wedge into broader AR and AP management. They had raised very little money from their pre-seed. They already had a couple hundred K in revenue, I remember. And just importantly, they had landed very large enterprises to use them, even at that scale. And for us, that was just so telling of what they were onto. That was a very easy thing for us to decide on. It was like a one call, two calls. We're like, obviously we're doing this, and they haven't disappointed ever since. We've built a very nice relationship with them, helped them through every fundraise, and yes, the growth potential I think moving forward is going to be very interesting now that Chile is sort of under control, let's say, in terms of the playbook is there. Mexico and Brazil are next, and we're seeing the early signs of what they're replicating in these countries to be very, very promising. What I love about this as a payments nerd is most of the revenue really is a software-like revenue. It's not just payment take rate like most, except it's true SaaS, not like most orchestrators that are just making very thin margins on payment processing. And I think, and it's very sticky. And so it's sort of this like perfect recipe for that started with a very clear pain point, and now they're identifying that they can just there's very long runway in terms of the amount of volume they can capture within these companies.
But let's go into now your growth as an investor. You've been doing this a while, and it's so impressive in the sense of you basically moved and now you're 6 years in. When you look back on your first few investments, how has your approach in evaluating opportunities and evaluating founders changed? Is there a concise answer to this or not really?
Hard to come with a concise answer, but I think, and I will say this again, I think the more time goes by, the only regrets that I have are the people that just felt like we should have done business with, and we didn't understand the idea. And I try to stay true to that and humble to that. Like, just focus on the founder. That's what matters the most. That's always going to take you the farthest, especially in seeds. I think evaluating markets in Latin America specifically, we have become much more sophisticated about thinking around, like exits are going to take a little longer. It's going to be a thing. But what are the, the spots where you think there's even international bid to like one day buy these things? Like, what are the spaces that really can be very too niche? Or what are the spaces that are almost a no-brainer sort of thing to build? So there has been a bit of a more nuanced evolution to, okay, maybe you don't want to do that much insurance right now because it's still too early in the market, but you want to get as much exposure to payments as you can because that's the backbone of all financial services. And so understanding even which sub verticals within fintech are most relevant at any point in time, similar in the US, has I have learned to do that, and I think that has evolved with the years.
So you brought it up multiple times. So I have to ask, like, is there one opportunity that you still consider that was your biggest miss to date and that's taught you a valuable lesson?
There's plenty for sure, to be clear. And if someone tells you they don't have plenty, they're doing something wrong. But I will tell you a ladder that I love that it will always hurt, which is Zeppelin. I met Sebastian Kreis when he was doing the seed extension. I will never forget. And very good founder, very good story, very early. And the reason why we didn't do that extension is we just had this also that has changed. Our flexibility to invest in rounds has changed. So we had this thesis of we only do fully financed seed or A. We're not gonna do extensions. We're not gonna do bridges. So because there's more financing risk coming after that we are not in a position to fund because we're a smaller fund. So we had this like very strict rule of like we're not gonna do tweener rounds. And that was a tweener round. And so we passed not because of Sebastian, not because of the business, because it was a tweener round and that wasn't a fit for us. And that hurt because then we really wanted to, and by the way, we didn't get it wrong, quote unquote, in like we wanted to do Series A. It's not like we passed, but then we got squeezed. It got too competitive. There wasn't any room, and when we had our chance, we didn't take it. And we have evolved to become much more flexible in terms of when we enter to understand that yes, you can take more financing risks, but sometimes these are the best opportunities to enter companies, and these are the times where you can build the tightest relationships with founders and like the most reciprocity. And so that has also been very different. Our approach is different in that regard.
You mentioned great founders, and it's so important backing them early. Where do you see the most value when it comes to like a founder's trait? What do you see now that maybe before when you first started, you're like, this is so important. They need to have this, or if they don't have this, it gets harder.
I feel like it's hard to give a definitive answer to that because
But maybe one you
depending,
like. Yeah.
yeah, of course, but depending on where the market is, I change my mind on like what the best, virtue is. But no, but seriously, I think grit. There's nothing like grit. It's grit and openness to feedback. I think the people who just put their heads down and like do what they have to do. Don't forget about the market. Just like focus, stay focused. There's like three things that matter. Just do those. The ones who show the discipline and the grit to stick to that have made it through the worst times. And I think that's just so important.
Yeah. Carlos from FinTech Collective mentioned the guys at Symmetric are like
That's a great example.
so comfortable of constantly questioning themselves but staying in direction, which he goes, is a really hard skill to do. You're second guessing yourself, but you're still moving forward, which not many people could do well.
So true. We're co-investors in Symmetric,
Okay.
proudly.
Okay. So do you have something to add or do you agree?
I agree. And I think that's one of the best examples. Like they kept their head down. For many years, they took them a little to get to the traction that they have. And now it's just this outstandingly amazing company that's redefining the way people reconcile payments around the world. And they also wanted to launch a product. I remember when we invested, it didn't work. It didn't work. Go back, stay focused, do what you have to do. Yes, I love that example. I actually do think about them when I say something like this.
Amazing. Last final thoughts here, just a couple questions. What was your biggest regret so far? It could be career-wise, pivoting into venture. It could be anything professionally.
It's a tough question because A lot of people thought I would regret moving to LA, and it was the best decision of my life. I guess, I mean, I've seen venture. I guess there's always regrets around investment decisions. I think that's always a regret. It's like, how could I have been better to like win this deal or decide this differently? And that's what we always go back to. So I can't be pointed to like a specific decision, but it's just a frequent questioning of, okay, why did I get this wrong? What should I do next time to not get it wrong again? And I think very frequently I think way more about the companies that didn't work than the ones that are crushing it. And maybe that's not great, but I think that's the one way to keep yourself honest around how to be better.
Gotcha. What are you most proud of now? Can be professionally. Yeah.
I am most proud of our Latin American portfolio. That's really what I'm
Yeah.
most proud of. I am so proud of the fact that we've built this. I think the founders that we have backed are such incredible people, and it's so humbling to see everything that they're doing in LATAM. It makes me so proud to have this full circle moment in my life of I always wanted to somehow aid financial inclusion, and I've played a tiny piece in a lot of these stories, and just seeing that and the presence that we have built in the region in a short period of time, it honestly makes me really proud.
Okay. Non-professional question. What do you wish you had more time to do? Like spent more time doing?
Skiing, of course.
Wow. I do like that. I'm just not very good, but it's so, so fun.
Well, if I could, I would be traveling to the southern hemisphere in the summer, like back
Yeah.
in the winter.
Flipping back and forth, skiing.
Basically.
That's a wrap on this episode of Cut the Check, presented by VCMX. If you enjoyed this conversation, I would really appreciate it if you subscribed and leave a review. It really helps more founders and investors discover the show. You can find me on LinkedIn at MacMeyer or check out my website at macmeyer.com for more insights on startups, venture capital, and the Latin America ecosystem. Thanks for tuning in, and I'll catch you next week.